General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's get this work done. It's technically week 1 of July, or week 1 of July. Put the year, just because it looks proper. Okay. Monday, 6/30/25. Today was no news, but I believe tomorrow kicks off the actual, dramatic short week that we got. I always need the screen grabber. I always miss the screen grabber. But this is a short week because we got 4th of July. So all the news is on Thursday instead of Friday. Hmm, 9:30 Power Talks. But like I said before on the Sunday forecast, which I didn't record it, but if you're in the Telegram, then you get the PDFs. And the Telegram, the link is in the bio. But it's some European, it's some central bank conference. It's nothing big. 10 o'clock. It's ISM PMI. That will move the needle. And this is the needle. CME Fed Watch. Anything that can mess with this sentiment is kind of like what I'm kind of tracking, because it was tariffs. It was never war. It's crazy, but it is what it is. Nothing happened today. I think Canada said they're going to go back and forth, but look, the needle didn't get moved. The interest rate does not care. China tariffs moved it back and forth a lot, but chance we don't cut rates. If we cut rates, we go to infinity and beyond. Earnings is light this week, but in the middle of July, we got tech. So this is like the quiet part. Tuesday is this. Okay, quiet on earnings too. But note, tech earnings are coming, and so is Prime Day. What you might have to look into for that case study. Dollar on the daily. That's the 4 hour. Okay. So we started with the move down first. I still think up before down. We can I would rather it engineer liquidity up here first. Maybe it just wants this. I still prefer above here. Really this volume imbalance here. I would rather sell from here. It runs. But that doesn't give me an entry, so I'm not going to chase it. I'm going to wait for it. We continue to melt. And I continue to wait for a tradable retracement sell. In Q on the hour. We hit all-time high today and really didn't do nothing. Let's look at this on the weekly though. Let's bring this closer. Okay, we gapped up. We have a flat bottom on the week. Now we get into that area of, I don't know what this is, but it can go. Now we get into that area of where you want to start busting out those projections like Dexter Lab be doing. Because it's going to be fib time. The easiest fib is still the OTE. That might be the go-to fib for targets. Old all-time high hit. Now we wait. I don't even need this anymore, but I'm gonna keep this here for a mile marker. Let me actually switch this to something solid, maybe gray. And this will be over the weekly high. Because I want to be able to use that as a mile marker if we do trade below it. This volume imbalance still needs buy side delivery. That's a good target as well. This is the candle I want to note. Really this low. So this is Friday's high. And Friday's low. I'm going to put it on the bottom. That's the range I think we're trading. This is the range I'm tracking. We close below, get resistance here. Then I know I can take a trade here. We got new week opening gap, giving us vibes that we can come back to for an easy draw. Let me make this a grade 2 so it's not intrusive. Watching Friday's high. If price trades below and we retest it as a resistance, then the old daily high can be used to sell from. Order flow is bullish. The safest trade is wait for the buys. But I want to sell to the buys and buy up. And it's all weekly high. 4 hour, we don't got much to look at here. We just kind of bounced on top of Friday's high, wicked it, re-wicked it. This is the stop hunt every time we had a low. Sales above here, since this is Monday. If I do want to sell Tuesday high in the weekly profile, that would be the idea, to target Friday's low, which is good for the retracement to go back higher. Really, we can get to 50% of here, but just for now. Vice versa, if I was looking for a buy, I still would look for Friday's low. So if we trade below Friday's high, I can sell to Friday's low and take the buys Tuesday from under Friday's low. I wouldn't want to just buy in Friday's low sitting right here. It's too close to liquidity. So vice versa, it's safer than just buying if we take the new week opening gap while we got Friday's low sitting right there. Sales above Monday high fit weekly profile logic. And it clears up those wicks from today and traps buy stops. That's a ideal trade location for a sale. Buys under Friday lows make sense. Under new week opening gap seems good, but Friday low is too close. I'd rather wait for Friday's low for the buys. Sometimes you could just be waiting because we'll just chop, but it's better than chasing and losing. You could have been waiting and chilling. Alert here. This is my target. I think I had bullseye emojis. That could have been a text thing. I'd rather have it in an emoji though. I think we can get to the flags that's the end. Yeah. Boom. I figured it out. Is this a flat bottom? It's not flat. It's like a baby wick there, but it's still flat, basically. Sales above Monday high is the target and the plan. Watching Friday's high too as well. If the delivery is delayed. Alert set at Monday's high and Friday's high, since those are my mile markers. So alert Monday high check, then alert this. Boom. All right, I'm good to go. All right, let's export this, add this to the Telegram. All right, y'all have a good day. Peace.